Hello everybody, Jim Malone here, coming to you live from Dallas Trading Floor. Well, it is Friday the 13th. I hope everyone's okay. Kind of a good or unlucky day. I don't know how it is with you, but definitely it's Friday the 13th. So, there you go. We just try to make it through here. Through the end of the week, we're the indexes are still pretty strong, but we've definitely got. Oh, that's not loading there, right? Huh? Okay, the indexes are still pretty strong, but hey, we've got issues with some of the other things here. So let's see if we can get this up. Okay, there we go. All right. Well, let's go to the first. Oops. There we go. All right. Okay. Oh, well, there we go. Okay, so let's view that. So let's go to the slides here. There we go. And we're still in a confirmed uptrend. The market direction is still up, which is a good thing. Which is definitely a good thing. The indexes have been doing well. The S&P 500 and the Dow Jones have been doing pretty good. The Nasdaq, well, it's not as good as some of the others. But let's take a look at the S&P first. And we are moving. We're in an uptrend day today, so it looks as if we have a good trend here. We're almost into the buy range. And the interesting thing about this is we've pulled to about the we're right about the 360 level, which is excellent for this. And by the way, this is the world's largest ETF. Many people have their entire net worth in this. So this is a very important thing. So we are pulling higher. So that is a good, that in and of itself is a good sign. I also want to show you the Qs. The Qs are moving up today too. Not as much as the S&P, but a little bit. And again, the key level here is about the 275 level. And we've definitely made some very good progress off of that. So hopefully we'll be, we've changed direction. We're going to move up. I suspect, it'll be an all clear signal if we get above about 305. Currently it's a 290.24 on the QQQ Trust. So that is literally where all the big techs live. That's where Microsoft is, of course. That's where Apple and a lot of the other ones is. Some of the larger techs are also in the Dow, but the QQQ is the one we want to watch, and the key level on that is about it's about the 300 level, about 305. Currently it's 290, and it's moving in an upward trend. So that is good. We have good relative strength on that. That means that money is still flowing to the tech sector, and the relative strength is 81. That means that it is doing better than basically all but 20% of the market. So the Qs are in the top 20% currently, and that is good. So we are moving higher on the QQQ. Definitely something to be very interested in. I want to show you the Dow Jones. That's pulled back a little bit today, and we've had some very, very good days on the Dow. We've basically had two really good days. It pulled off a little bit yesterday, and it's down basically to about 289.76 currently, and but it seems to be continuing this upward trend. This is good, and if you're looking at the formations on this is what they call a double bottom. There's a double bottom on this. So actually, this is telling me, based on this chart pattern, the overall market is likely to move higher. So that's what that's saying. So hopefully we can keep up with that trend, and that's looking fairly good on the Dow Jones. Now that's the Spider ETF that's talking about. Now I do have a kind of a special for you today. I have been, I moved out of some of the other stocks, such as Palantir and some of the other ones, but I have moved in today with a full position in a small portfolio on a company here in Dallas. Actually, it's in Little Elm, Texas. It's a company called Retractable Technologies, and the symbol of that is RVP. Now, I purchased it at 805, and so this is not really a proper buy point. I just want to be clear about that. A little bit of speculative because they are going to have earnings tonight. So if the earnings are good, it might pull back a little bit. I did set my stop loss at 746. So if it does pull back a little bit, you know, I'm ready for that. But we do see some nice volume spiking in there, you know, and who knows? The trend is up on this one. We'll see what happens. You know, I went in with one, basically one position. Now, what do I mean by positions? This is what they call position trading, and this is something, if you can get in the habit of doing this, this could be very, very helpful for you. And here's how it works. If you take the total value of your portfolio and you divide it by 8, that is, each one of those 8 pizza slices is one full position. When you go into a stock initially, you either want to go, you never want to go any more than about one position at a time. When you go in, typically the rule of thumb is you want to set your stop loss at about 7% down. So you want to take whatever you paid for that stock, multiply it times about 0.93, and that gives you about a 7% kind of cushion there. And you want to put that in good till cancel stop loss and just set that. Then, if the stock moves higher, you're great. But if it moves lower, you're sold out. But you don't sell out. You don't damage your entire portfolio. If you do it that way, your maximum risk is basically 1%. Now, here's how I get to that number. If you have 8 slices and you're only risking 1 slice, and you're only risking 7%, well, that's approximately 8%. So if you divide 8 by that loss, you get 1%. So you're limiting your loss on that particular trade to 1%. And that's what I mean by a full position. So with Retractable, I went in with a full position. It's a little bit speculative. And then I set my stop loss, my 7% down stop loss, which, because I only am going in with one position, that equals approximately 1% of my portfolio. So I just wanted to kind of to give you an idea of kind of what I was doing there, you know, and what I mean by this full position, half position, all that kind of jazz, you know. It's kind of, sometimes it's kind of confusing. Here are my current holdings that I have, and this is across a number of portfolios that I trade, but I'm still in Cloudflare. That is going to be doing earnings. It's down a little bit today. GBDC, that's Grayscale Bitcoin Trust. I've done quite well on that, actually. It's pulled back a tad. GBTC is the one on that. I'm also in a Form Factor, which is FORM. That's up pretty nicely today. I'm also in another medical one, ResMed, RMD. That's the sleep apnea company, and they've done pretty well. They're moving up a little bit. I'm in Imphy. That is a company that is going to be acquired by Marvell Technology, but it is it's up today a little bit, just a tad, 40 cents. It's going to be topped out soon. You know, about 147 is going to be 147, 148. So it's practically at the limit of where it's going to go. It's up $2.77 today. And of course, Retractable Technologies in. And when this slide was taken, it was off a little bit, but I bought it at 8.05, and it's currently trading at about 8.28. So that kind of gives you sort of an idea, you know, of where I'm trading and you know how I'm doing on that. And of course, what I have out here is, if you're interested, I have a action trade alerts, and they're easy, and we send those out based on, you know, good trades that are coming into the market. Sometimes, you know, we're not available to put it out on TikTok, so we'll send it out on the action trade alerts, and it's super easy to get onto those action trade alerts. All you have to do is go over to www.Dallas Trading Floor, and then there's this little man here, and right under that it says, it's kind of a happy man with a chart. That's me, hopefully. I'm not quite as skinny as that, unfortunately, though. Subscribe, free trade alerts, first and last name, email address. Hit that subscribe button. Of course, it's all free. Cancel anytime you like, and it's just so that you can see how I'm in trading at all times. And by the way, on the site we also have some very interesting ideas here. If you want to learn to trade the Can Slim way, and I think that's a great way to trade because many of the top traders in the world do trade that way. The books on what Can Slim is are on my site. Now, I did not write this. I did not invent Can Slim. It was invented by William O'Neill, one of the greatest traders of all time. And there are 2 books that I think that you possibly should look at and getting. How to Make Money in Stocks, A Winning System, Good Times or Bad, and How to Make Money in Stocks, Getting Started. That's sort of the cliff notes for it. The best thing is to buy both of these books. Take a look at them, and that kind of gives you an idea of the lingo that I'm talking about. Also, on my website, www.Dallas Trading Floor, all the current YouTube videos compiled there as well. And I do have a new tab for a podcast. We're starting a podcast, and we're available on Spotify, iTunes, and such things like that. So that is the that is that for Dallas trading floor. So let me get back to, let's get into the questions, and hopefully we're going to see. Yeah, I'm frozen a little bit on there. Okay, hopefully we'll get we'll get questions up here in just a second. Sometimes I'm a little bit challenged when it comes to bandwidth, and I've still got the little the little circle going. There we go. I think we now have the bandwidth back, and hopefully we'll be onto the questions. So I'm going to take a look first at the questions from YouTube. So let's get into those questions. I mean, of course, thank you very much, Christian. Always like to hear from you. Thoughts on next buy point for Palantir and JD, and also in NTDOI work going into the holidays. Thanks, Jim. Hey, thanks, Jim. Thanks, Christian. I love your comments because they're very, many times they're very, very insightful. I definitely and thank you very much for watching the show. So let's take a look at Palantir. Now I have sold out of Palantir. The symbol is PLTR. Now I sold it right before earnings. I may be back in it. It's up a little bit today. I sold it at 15. Let's take a look at the chart on this. I think that this one may actually be buyable on the other side. I'm going to look at the daily chart here. I came up with the weekly. There's the daily chart. Yeah, we've pulled back and we've pulled right back up. So it looks to be very strong. I think that this is buyable right at this time. The reason I did not buy it, we just went through earnings, and the reported earnings were basically for this year there was a loss of 0.53. And so it's a year-over-year loss. Last year it was a 0.0. It was 9 cents a share. This year it's 53 cents a share. But we still have we pulled back, and then now we're starting to pull up. So I think that this might be a very good time to get back into Palantir. And I think that there really isn't a strict buy point here, but I think that you could basically buy this anything above about 14. And I think that 1475 would be ideal. Now currently, it's at 1563. I do believe it's going higher, though. By the way, based on what I'm seeing on this chart. So that's a very, very good question, Christian. I appreciate it. Very good question on that, and I think that it definitely has some wings. Now let's look at JD. Now, a word of caution, everybody. A lot of people have been in BABA. BABA is having some difficulties with the government of China. So I think you've got to be careful with BABA. But JD doesn't seem to have those issues. So I think that is very good. It's pulling up beautifully. It's up $5.54 today. Now today, there is a cautionary note here. Earnings are in 3 days. So I am probably not going to be in this until next week if it shows strength. It's pushed up very nicely. It's at 91.89, up $5.63, which is tremendous, and the relative strength is moving up. So I do think this is very strong. If you're currently in it, I think you could stay in it, but push your stop losses up there, push them up a little bit, so that in case there's a pullback, you can capture that profit. If you're coming into the position as a new position, I don't think that. I think you want to wait. We want to wait for earnings. Earnings are basically coming up, and they're basically coming up on the 16th of. They're coming up on the 16th. That's Monday. So I would wait on earnings to see how that happens. I believe it's Monday after the bell of that one for JD, but I still think it's very strong, and it should be on your watch list. It's definitely on my watch list. And by the way, speaking of watch lists, I do have access to the small portfolio, and I do keep a watch list on there. And if you're interested, all you have to do is go to www.DallasTradingFloor and enter the information, and there's a box for get a link to the small portfolio, and we'll send you a link, and so you can see all the watch list and how I'm trading and everything like that, and that's available on www.DallasTradingFloor. And if you're watching on TikTok, super easy to do. All you have to do is go to my profile on the screen, click the link, and you'll be taken directly to the page. So you can sign up for those links on, to see how I'm trading it. So very interesting. Okay, so very good. Thank you very, very much, Christian. Let's do the last one. NDD. This is for Christian here. Let's look at the stock. Let's see if I can bring it up. NTDOY is the symbol, and that is Nintendo. Everybody's heard of Nintendo. I certainly have. I used to have a Nintendo many years ago. It's pulled back a little bit, and it did have excellent earnings. Just went through earnings up 141% year over year for the quarter. So very, very good earnings on Nintendo. But this is very, very typical of how stocks will trade. Coming into earnings, they'll move up, and then when earnings hit, they'll pull back. So as a cautionary tale, going into earnings, I always like to either sell my position or hedge into earnings. One of the ways that you could hedge into earnings is if you have a stock coming into earnings, set the stop loss up very tight. Instead of 7% stop loss, you want to set it from where it's trading about 2.5% down. And that's why if there is a pullback, when it goes through earnings, you'll be sold out with the profit. So it's all about the profit capture. I like Nintendo. It looks like it's turning direction. Let's see the criteria if we can buy this thing. And basically what I'm doing here is I'm showing you the checklist that I go through every time. Now, it is basically an excellent checklist. It's got 8 out of 9 criteria. The only thing that it is failing on is that the funds are not, it's not a good accumulation by the funds. It's essentially the funds are not moving into the stock. Now, why is that important? Well, in order to move a stock, typically, you need these funds. If you totally depend on retail investor, that is a trouble because there's just not enough retail investors out there to significantly move a stock. This is part of the problem with many of the Chinese stocks. It's not that they're bad stocks, it's just that there's not a lot of institutional investment. So with Nintendo, of course, that's a Japanese company and very, very strong. It has significant fund ownership, but it is increasing. It's 75 funds, but in terms of the big picture, it doesn't really, it doesn't have as many funds as some of these other Cloudflare, of these other stocks. Basically, right now, most of the people that invest in Nintendo are retail investors, and that means that the potential for it is not as great. So, would I buy this stock now? Probably not, even though it does have a relative strength of 81. I might watch list it, but I wouldn't buy it. And it's based on this fund ownership, the ability to move higher. So that's the way to go. Okay, we have a great question from Shalish. Thank you very much. Is NEO a buy, sell, or hold, or trade, or whatever? What is NEO? The EV stocks were pulling up, and then they're pulling back. It's just one of those things. The issue is, of course, that many of these are very volatile. They're all coming for a position. Right today, NEO is it's pulling up again. It's $3.47 right now. It's at $45. So wow, it's kind of going stratospheric. Now here's another thing. If you're not in the issue right now, be careful because we are coming into earnings. But one thing you can do going into earnings, if you're going to buy it into earnings, and you can buy this into earnings, this is a very powerful stock. But what you want to do is if you buy this now, if you buy NEO now, set your stop loss at 2.5%, please, because if it does pull back, then you won't be hurt. Because coming through earnings, these things can move down very heavily. But this has an excellent checklist, 8 out of 9. So I am very, very bullish right now on NEO and increasing fund ownership. So this is looking really good. Out of the Chinese EV makers, I think that NEO is the one that you want to be in. I'm currently not in it, but I am reserving some of my small portfolio for it. So I do think it's a very good stock right now, and you could definitely go into it. But if you do go into it before earnings, and remember earnings are in 4 days for NEO, you want to set your stop loss at about 2.5%, not the normal 7% that you would in a regular stock, not going through an event such as the earnings. typically in earnings that will move a stock either up or down, but typically it moves it back. So that's that could be kind of a bummer if you're getting into it. Hey Jim, I have 300 shares of SPWR at 1864. Could you show me how to hedge them with some calls? Okay, well, what we can do is we can sell some calls. So let's look. So let's go and get the chart for. What I'm going to do is I'm going to switch my. I'm going to switch my chart here a little bit so I can do this. But let's go to. Let's go over here to get the options chain, and that's how we do this. We go to the options chain, and the one I'm going to use is the one from the NASDAQ. So let's go get to the NASDAQ option chain, and we'll put that up here in just a sec. There we go. And let's see, we're looking for SPWR, and I'll put that up. And of course, that is SunPower, and it's up today 21 cents or 1.5%, which is really excellent. So going in and into earnings. Let's see if we can hedge that a little bit on this. Okay, I'm looking out here at about the December. That's actually December 18th call, the 64 call. Here's what I would do on this. Okay, so we're at 18. Okay, let's see if we have a call at. All right, let's see. Okay, on the 19 call. Here's how you can hedge. Here's how you can hedge your bet a little bit here. Let's look at the NASDAQ option chain here, and we do have this December 11th call. It's a 19 call, so it's not a whole lot of it's not a whole lot of upside, but it's selling for $1.73. So if you were to take where you are now, and then you're at 1864, I would do this. I would sell the 19 December 11th call. Now you're going to limit the amount of money that you can make, but it gives you a little bit of downside protection. You could sell three call contracts for 173. So that's what I would do. Or possibly, actually, probably a better move for you would be right at the money. I would sell, well, a little bit below the money. There's an 1850 call. It's a December 11th call for 201. So you could get $600 for that right away if you did that. So that's how I would handle that particular strategy for hedging a little bit. You're going to have the way to do it is to sell a call approximately at your cost, and that's going to give you. That's going to give you a pretty good number. So I've been ignoring the people on TikTok, so let's get some questions from TikTok. Thank you so much for holding on. Okay, will NEO go up? Who knows? I probably will. Remember, we're coming into earnings, so the thing about NEO that you've got to be very concerned about is with NEO, when it comes to earnings, it can pull back. But if you're going to buy it into earnings, and I think you possibly can with NEO, earnings are basically in 4 days. Basically Tuesday of next week is when earnings are going to happen for NEO. The best way is to buy and then do a stop loss at 2.5% below where you purchased from. It's a very, very tight stop loss. So you may get stopped out. But if it reverses, it's a good way to go on that. So that's how I would handle it. When will ACB go back up? Let's look at ACB. What goes up must come down, right? That's what they say? I don't know. That's not good. All right, so let's look at ACB. ACB is basically Aurora Cannabis. Here's the thing about cannabis stocks, and I don't. No moralization here. The biggest problem with cannabis stocks is going to be legalization. Now, if Biden is the winner, there is a chance for nationwide legalization. Now, Aurora, of course, is a Canadian company, and they are legal all the way around. But, the problem with cannabis is that it is so easy to grow it. I don't know anything about. No, I'm just kidding. about that. It's so easy to grow that there's a tremendous oversupply. As a matter of fact, if you go to the state of Oregon, I think everybody and their brother is growing marijuana. And so, they're trying to put it in everything. There's, CBD oil, and there's hemp couches and all this stuff. We are swimming. We are literally swimming in cannabis. So I can't recommend Aurora Cannabis. I don't think it's going to move back up, and I wouldn't be an investor. I would be out of this thing, and I would lose this thing like a cheap habit. Boy, this is a bad chart, and it has a terrible buying criteria too. It's only 3 out of 9. So, boy, I tell you what, there's a lot better places to place your capital. I know it's painful. When you think that, that everybody thought that the marijuana business would be the greatest business in the world. Well, the legal marijuana business is probably one of the worst businesses in the world. The illegal business is probably very good, but the legal business, not so much. I just think you need to get out of it, and, it's just one of those things. You live and you learn, and I just don't think that the marijuana stocks haven't really been doing well for about, 3 years. 3 years ago, when it just started out, I was an investor in a mutual fund with symbol MJ, but it hasn't. I've sold out of that 2 years ago. It just hasn't shown any good movement, unfortunately. But it's just one of those things. Let's take a look at some of the other people on TikTok. Thank you so much for a lot of people are joining. Hey, wow, that's cool. Okay, so here we go. Is FSLR in a buy range? Okay, well, let's look at FSLR to see if that is true. FSLR. And that is, of course, for solar. And you know what? I do like this chart. This is one of the ones I kind of do like. It does have a nice upward trend. Let's put that up on the screen so that you can see it. And by the way, if you're looking on TikTok, I'm simulcasting this, actually the charts. On the TikTok chart, I'm just showing the retractable technology chart, but on the I'm actually doing live charts on the YouTube feed at youtube.com/Dallas Trading Floor. And this is episode number 174. So let's look at this chart here. We have a, it looks as if our, let's see if I can get, there we go. Okay, so we do have an upward trend, which is nice. We do have a cup formation with a potential buy point. Let's go to the daily chart to see kind of where we're going. Now it's pulled back a little bit. I don't like this, the short-term trend. I don't like this short-term trend. We have a downward we have a downward trend on this in the short term. So I think you have to be a bit careful. Where would I possibly buy this? Well, what I would do is I would see if it looks like the candles are it seems like there's some resistance at about the $80 level. It's currently trading at $79.95, but you know what? I wouldn't be a buyer until we got a reversal. And I think that if we pulled above the 21-day exponential, then I think you can buy it potentially. The 21-day exponential is 83.37. Now, what do I mean by that? What do I mean? Everybody would say, well, why wouldn't you want to buy this? It's cheaper now. Why would you buy it for more expensive? Because if it moves above the 21-day line, it is showing strength and it's changing its direction. Right now, it's in a downward trend. But if it moved above the 21-day exponential at 83.37, then it would show an upward trend. So I want to see that happening. So I want to see it cross that 21-day line. So would I buy this now? No. But I would watch this and I would put an alert on this one. I'm not in this one currently. I would put an alert at 83 on this one. The checklist looks pretty good, 7 out of 9, so that's pretty good. The ownership is good. I mean, there's people coming, there's a lot of funds going into there. That's what I like to see. I like to see funds going in to an issue because, remember, it's the funds that move the market, not the individual investors. Basically, us little individual investors, we're little like minnows out here, and we just follow along with the whales and see where they're going, and we go there, and then if we do that we see where the good stuff is. So with First Solar, I like the stock, I like everything about it, but I don't like the trend. So I wouldn't buy this one currently. I would wait a little bit on First Solar, but it's a great question, and I appreciate keep bringing it up. So watch this one, set an alert at 83, and that might be a good buy point for for this one. So let's look at this one, AVPO. Thanks, Marcin. Thanks for stopping by today. Please tell your friends. AVPO. Alrighty, let's take a look. And oh, wait a minute, I don't get a symbol on that. Let me see if I got that right. AVPO, is that right? AVPO, it is. I'm sorry, I don't see. Oh, okay, Marcin. Let's go for Live Automotive. This is one of the Chinese electric vehicle companies, of course, and it's not quite as prominent as NIO, and it has pulled back a lot today. Yeah, this is sort of one of the dangers of having a thinly traded stock. Now, let me explain about this. What do I mean? What do I mean by this? As you can see, it went through earnings. Did it go through earnings? Yeah. There was a huge sell-off yesterday. This is what they call a short squeeze. Okay, there was a huge sell-off. So let's go back to the weekly chart and take a look at that. Yeah, it went up all the way up to 40, but it's pulled all the way back to 31. So wow, Kazawi. There's a lot of interesting action on this one. This is pretty thinly traded. 99 relative strength, though. That's very strong. The checklist is 70%. That's 7 out of 9. That's not too bad. Not great in terms of earnings per share, but well, actually pretty great. Actually pretty good. Let's look at this is the issue with LI. There just isn't not enough funds in this. There's only 75 funds, and it is an automobile company. So, would I take a flyer with this one? You bet you I would. But unfortunately, not at this level. Not at this level. The last cup with handle formation had a buy point basically on the breakout of about $21.86. So currently it's at 31. I think it's a little bit extended. Definitely want to put this on the watch list. I would not buy this one now. It just is not set up right. But if it pulls back a little bit more and then shows some strength at about the $26, $27 range, then I think you could possibly move into this one. But right now, I think you have to be careful with LI. I think there's better ones. I think NIO is probably going to be better for you than that one. So, here's the thing, stocks are very unfair. The winner takes all. It's winner take all. So in the Chinese automotive space, I think you want to be careful. And I specifically think you better be careful with the non-leaders. Right now, as far as I can see, at least in the Chinese companies, the leader is NIO and nobody else. So it's really Tesla or NIO, or then one of the other automobile manufacturers. Now, here is a kind of a lower risk trade on the EV space. Interestingly enough, the biggest manufacturer of cars in China is none other than General Motors, which is really strange. And they are starting to build cars in China. Now, this is a lower risk trade. And this is kind of this isn't, as they used to say, this isn't your father's Oldsmobile, it's your grandfather's Oldsmobile. Oldsmobile was a brand that GM had at one time and was discontinued. But if you're looking to make a stand in the vehicle space, you know what? I was looking and I found General Motors. Now, I haven't bought General Motors ever. I've never bought the stock. I've never owned it. Wasn't my father's stock. This is my grandfather's kind of stock. But interestingly enough, the charts are looking pretty decent for General Motors, if you could believe that. And they're producing a ton of electric vehicles in China. And their Buick brand, believe it or not, nobody likes Buick in the United States. But in China, Buick is a big deal. So this might be instead of going with companies that are undercapitalized like LI Motors, why not go with one that is capitalized properly? And that's GM. It has a 66 checklist, which is my minimum, 6 out of 9. It has excellent fund ownership. It's increasing, believe it or not. It actually pays a dividend, and it actually sometimes makes money. So, if I was looking to, I've pulled out of Tesla, but here's one thing I want to show you in the chart on GM. It has this very, very nice upward trend. And so, interestingly enough, GM might be the EV company for you. And I never would have thought that, but I am coming to that conclusion. Not very sexy, but it might be a good choice. GM is the symbol, and it trades at about 41.09, and it's pretty stable. It's up $3.72 today, or 9%. And this is General Motors, folks. So instead of buying the Chinese companies, think about buying a GM. You never know. You never know. Okay. Let's see. Okay. Jim, thanks for your advice and your positive attitude. Well, hey, if we didn't have a positive attitude, I'd be crying. So it's not some of my trades anyway. But I am excited. I am excited going forward. There's a lot of good stuff to, that are coming up. Let's look at this next one. Thanks for Go Tigers. Hey, Detroit. NVEE. Let's look at NVEE. NVEE. And that is NVS Global. And it is a professional and technical engineering company. And I'm not that familiar with it. It's currently trading at $69.60. It's up $8.29. Looks like it has had a blowout in terms of earnings, up 40% year over year. That's pretty excellent. Relative strength is 87. Let's look at the rest of this. It has got a very nice checklist, 8 out of 9. That's good. Then the fund ownership, it's pulling out back a little bit. Here's the thing. It does have a nice upward trend from about since we began this, from about March of this year. There is an upward trend on this, but overall this has a downward trend, unfortunately. And I don't mean to be negative Nelly, but it looks like it's pulling above that. So if this stock moves above, I do think this is a buyable stock. If it moves above about, and I'm looking about here, yeah. If it forms a base, and it moves higher, about $10 more. I think you possibly can buy this, coming out of this. But I think I would be very careful. I wouldn't buy this one right away. I would wait until there's a little bit better chart pattern. But I appreciate you bringing it up because it's a stock that I was not that familiar with. So I do appreciate it. Beam is the next one. BEAM is the symbol on that. So let's look at Beam. BEAM. All right, and that's Beam Therapeutics. This is also, I do like this one. I do like this one. Here's why I like these kind of things. It's in, now this is not, they always say when you buy a stock, you buy it on 2 criteria, technical criteria and fundamental criteria. When you sell a stock, you sell it totally on technical criteria. But this one, I like this area that it's in because I like DNA testing. I like testing in general. I think this is an IPO and it's had a very nice run. It's on a first stage consolidation. This is something that I would consider putting on my watch list. Beam Therapeutics. Now, I don't own this one. I have been moving, just so you'll know, I've been moving out of some of the more software tech-oriented issues into some of the medical issues, mainly because of the results of the election. I do think that there is going to be a shift into many of the medical products based on the election, but that's just a speculation on my part. So I do really, really like this one. This is a gene editing company. CRISPR Therapeutics is another company that I like in this space. Here's the thing I really like about this one. It's got the minimum checklist, but the funds are starting to move into it. It's a little bit early because it's an IPO, and IPOs are tough to buy. Let me tell you, they're tough to buy, and it's currently trading above. It's currently trading above its first stage consolidation buy point. What I'm going to do is I'm going to put out the buy point on this one. The buy point for Beam, BEAM, buy point is equal to 31. Let's see if that's right. 31 on first stage consolidation. And this is a good time to possibly walk through this. Can you buy this above the buy zone? Possibly, because it looks like the trend is definitely up with this one. I would wait until we come through earnings on this. Let's look at earnings here. Earnings are due on the 31st, so at the end of the year. So we're through earnings, which is good. We're through earnings, so so I would not buy this into earnings, but this is definitely buyable at this time. It's up 0.29. Now, what I would do is I wouldn't buy it. It probably wouldn't buy it at this level. I would wait until it pulled back a little bit, possibly closer to the buy point, which is 31. But this is an excellent stock, and I think that you want to watch list this one, but not buy it. But I'm going to watch list this in the small portfolio because I do I'd really like this one, but I wouldn't be a buyer today of this. All right, so let's look at KTOS to see if there's anything there that we can discern from that. KTOS. Did I get that symbol? Yeah, I didn't. I fat fingered that one. Here we go. There we go. Okay, provides weapon systems for testing. Okay, it's in San Diego, so it's defense related. I can't recommend this one. I'm sad to say I cannot recommend this one based on this chart. It just isn't strong enough for me. I appreciate this, Edwin. Thank you very much for bringing it to my attention, but I don't think this is a good enough chart. There is a consolidation. It's just basically a first stage consolidation. The pivot is 22, 26, but it only has a relative strength of 51. Oh, geez, I cannot recommend this one. 6 out of 9 on the checklist, and the ownership in terms of fund, it is going up, so that is good. I cannot recommend this one at this time. Let's see if it pulls higher. If it starts to close significantly above 24.97, it's currently at 20.09, then I think we can start watch listing it. But right now, unfortunately, this is not. KTOS is not a buy right now, and that's just one of the things. It's just I really can't recommend buying it at this time. NEO, why dropped today? Well, did NEO drop? I think it pulled back up. I think it is. NEO is very volatile. The thing about NEO is, and it's probably one of the best of the Chinese electric vehicle manufacturers. The problem is it's relatively thin in terms of its trading. Yeah, it's pulled back up. I mean, it's about 10% below its all-time high, so it's definitely in a buy range. It's up $3.12 today. I think that's where it closed, 44.75. I do believe, though, that this one will pull back probably to the 40-day line when earnings happen, and that's in 4 days. I suspect this one to be pulling back to about 26.60 soon. So don't buy NEO, but if it pulls back to the 40-day line, then and it reverses, then possibly buy it. Consider buying it, but not right now. Don't buy it into earnings based on this chart. I think you can see that there will be a pullback. This is essentially. I don't think this is a. This does have some shorting activity on it, not a lot, but half a day. But I do think that there is about 7% of this issue is short right now. So there is some significant possibility that we will see this one pull back. So, and I think that's what's causing this to go up. Now I know it sounds very confusing, but if there's a lot of short interest and it comes into earnings and it gaps up, then there is a lot of buying pressure for people that are buying to cover their shorts. So I think that we want to wait to earnings to see if it comes back down to that 40-day line. If it does and reverses off that, then I think you might have something there. So that's kind of how I look at it in terms of that. So let's look at some people that are coming in. Oh, should I buy Tesla? Okay, Crazy Gadget. That's Crazy Gadget off of TikTok, and of course we're broadcasting live on TikTok. So the symbol is TSLA, and can I recommend? And everybody knows me as a Tesla bull, and I have been a Tesla bull, and I still am a Tesla bull, but I'm out of the stock right now. Why am I out of the stock? You say, gosh, because I think that the stock is sort of resting a little bit, and I do think it's in what they call a basing pattern, and I just don't think it's going to pull up just the way it's been pulling it. It's just been phenomenal this last year. It's just gone up and up and up. I cannot recommend buying it. I think we're going to be closing. My guess here is that we're going to see it pull back to about the 360 level, and then at 360 I'm going to get much more interested, and I'm going to get really interested at about 340, but I do think we're going to be pulling down probably into the end of the year. I thought it was going to be able to go higher than the pivot being at 502, but that does not appear to be happening. So I do think this thing will be pulling back a little bit. If you're in the stock and you have good profit, there's no reason to sell it, but it's just not a good time to enter the stock right now. Tesla, I think you want to kind of put on your watch list. I don't think that you want to. I don't think you want to be owning it right now. I'm anticipating a pullback to about the 360 level, maybe even the 340 level, and then if there's a reversal there, that's when you want to buy it. But we want to wait for a reversal. It's in a basing mode. It's moving lower right now, and so at least for right now, I don't think it's where you kind of want to be in terms of that. I just don't think you do. So that is kind of where I'm at in terms of in terms of Tesla. All right. So, and this is the question from Go Tigers. Thanks. No, I don't think it's time to get back into. I don't think it's time to get back into Tesla yet. I want to see Tesla pull back to about 360, maybe even 340. Reverse off of that, and then I'm interested in being back in it. Because I think long term, Tesla is a world beater, but there's no reason to lose $30-40 a share while it's in the basing mode. So that's kind of the way I believe that it's going to move. Why is the $31 stock LI and NIU would have 30-cent difference between a buy and a sell? Okay, very good question on Thinkorswim. That's a great question, JJ. JJ is that's a question from the YouTube chat. Why is there so much difference? Why is there so much difference between the bid and the ask? Well, the reason that there is because these stocks, LI and NIU, are very, very thinly traded. Okay, now if you have a stock that has millions of shares and is being, and is less volatile, then the bid and ask is almost nothing. It's about 1 cent, maybe even 5 cents. But in stocks that are very thinly traded, and that's definitely the case with LI, the bid and ask is very significant. So even though the stock goes up, you may not be able to sell it at the price that you can make any money on. So that's one of the things you have to be careful with in thinly traded stocks. And almost with the exception of a very few issues like JD, like BABA, most of the stocks that are being traded on the Chinese exchanges typically are thin relative to some of the ones that are on the New York Stock Exchange. So that's the reason why there's such a difference between the bid and the ask, and that's a very, very, very good question, and it's very frustrating. This is one of the reasons why when you have stocks, and this goes for pink slip stocks and penny stocks, sometimes the bid and ask is just amazing, and that can make them very hard to trade profitably. So just something to watch out for. AMWL, let's look at that really quickly. It's AMWL, and that's American Well. And American Well has been one of the ones that has come out. Here's the thing about American Well. Not all IPOs are successful. I just think, this is the hard lesson. And I definitely have learned this over time. We have a lot of selling going on here. We just went through, earnings are basically, the IPO was on the 17th of September, and the earnings are basically due on the 28th of January. This does not have the kind of right chart. It does have relative strength of 90, but there's been a lot of selling on this on the weekly chart. If you're in this one, I think I'd be very careful. If you want to stay in this one, reduce your position. Maybe. Now, what do I mean by reduced position? Well, as I was saying before, with the position trading, you take your entire portfolio, divide it by 8, and that's one full position. Now, if you have one full position of American Well, sell half of it, because I don't think it's going to be doing as well. It has some interesting mutual funds in it, and it does have some fund sponsorship, but the checklist is only 5 out of 9. This is below my criteria for buying. It does have a relative strength of 90, so that's good. It does have fairly good sales, but they're falling, unfortunately. No, I'm sorry. No, they're going up. Excuse me, they're just not going up as fast. But here's an issue on this. This should be a positive. This is not a tech company. Well, it is. It provides telehealth. It's still losing money. So I just can't. I know this is it's a Teladoc-like company, but I think this one you want to avoid this one. I really do. I think it's this one is avoidable. Whereas I was in Teladoc and I did quite well, and I don't think this is the one that you want. It's just the area is just getting too difficult to make money in right now, and they're not making money. CGC. Let's take a look at CGC, and this is a question for Jay. CGC I'm looking at on YouTube. Well, it looks like we pulled up there. Very nice. This is Canopy Growth. Again, this is one of the pot stocks. Most of these stocks are based in, matter of fact, they're based in Canada, and they do sell in the stocks do sell in the American exchanges, but it's not, of course, cannabis is not legal in all 50 states. It is legal throughout Canada, but not in all 50 states. I just can't get excited about Canopy Growth. This is sort of an idea. 3 years ago, I was very excited about these stocks, and I was buying and selling these. Right now, I am not, because there's just too much supply of cannabis out there. Cannot be excited about it. Now, that's not on the technical. That's on the fundamental basis. But even on a technical basis, this has not got the kind of chart that I like to see. It's got a downward trending chart. All right. Now, people will say, well, why not buy it now? It's cheaper, and then maybe later on it'll go up. Well, I don't believe that. Because remember, when you're buying stocks, it's not like you're buying inventory to resell. So what you want to always be thinking about is, does somebody else want to buy this for more than I paid for it? That's a very important thing. So you're not buying it to consume it. Well, you might be with Canopy Growth. You might be. But you're buying it to resell it. So I cannot get behind this one. I don't think this is where you want to be. There's been some buying of this. It looks like they did have some decent cash flow, but they're still losing money, and there's just a lot of competition, and so I just can't get excited without it. I just, unfortunately, this stock, and I'll show you the chart here, it just doesn't have the right look. As you can see, that's a little red line that I drew, and it's got a downward trend, so that's not what we want to see at all, really. It's still got a 7 out of 9 checklist, so that's not bad. Let's look at the fund ownership, and it does have, pretty good fund ownership. It's pulling back a little bit. That's good, but I can't get behind Canopy Growth, and this is one of the best of the pot stocks. I just think you want to stay out of this area until there's some consolidation. I just do. I don't think it's going to be as fruitful as a lot of the other areas. So, Katrina, thank you very much for this question off of YouTube. XPEV. Let's look at XPEV. Thank you for giving me the symbols. That's so much easier. XPEV. Because I don't know all the symbols offhand. I know some of them, but okay, this is Xpeng. Important. This is also a Chinese electric vehicle manufacturer. It did have, it looks like some decent earnings, but it is still losing money. I'm a little bit leery about this one. This is up $7.18 today. The problem with these manufacturers is that there is a huge market. There's a huge addressable market in China for electric vehicles, absolutely no question. But I think that when it gets down to brass tacks, there's only going to be a few winners. I think NIO is going to be one of the winners. But interestingly enough, the car company that I think that is going to do probably one of the best in China, at least in the electrical vehicle market, is, believe it or not, General Motors. Believe it or not, General Motors. So, why not buy General Motors, which is the biggest manufacturer of motor vehicles in China? Why not buy them as opposed to this one? So I can't really get that much behind it. There's a lot of Me Too-ism in the Chinese stock. This might do very well, but I can't get excited about it with NIO. I think NIO is a better stock, and I think Tesla's a better stock than NIO. So, but as an alternative, you might want to consider a very well-heeled foreign manufacturing in China, and that's definitely General Motors, and they are, I think, the #1 vehicle manufacturer in China. So, and you can buy their stock for, and it's up significantly today. It's a $40 stock, and it's a real company. So that is kind of an interesting thing. Is Zoom a buy? Well, Zoom, ZM, is the ultimate stay-at-home stock, and that might work very well in New York, because it looks like Andrew Cuomo is going to lock everybody up for 6 more weeks. Man, I tell you, it's like Escape from New York there. But it's falling. Is it a good company? Yes, but I think it's gotten way, way too ahead of itself. I think stocks have a life cycle, and this one is just, it went up really fast, and this is a bottle rocket company. It went up really fast, and they have a good product, but can they sustain at the level that they're at? I think the jury's still out. It's pulled back hard, and let's look at the daily chart on it. The weekly chart is definitely showing that story, and the daily chart I think is a little bit more of the same. Yeah, it's moving down. It's at 403 right now. It was up at 588. It's just not what I'm liking to see. It's fallen really heavily through that 40-day average. Now, where could you buy this thing? Well, I do believe that there is a place to buy it, and that's going to be the 200-day line. I think it's going to pull back all the way to the 200-day. I hope that's not the case, but I think that's what it's kind of looking like to me. We have earnings in 17 days, so that's a little bit risky. So, what would I do with Zoom today? Nothing. I wouldn't buy Zoom. The trend just isn't the right trend for me. And as you can see, the trend is your friend, right? And this, unfortunately, is not the kind of trend that you want to see. That's a downward slope, and that's on the daily chart. Let's look at the weekly chart to make sure I'm not totally all wet. We have the same problem with the. We have the same problem. Until this thing reverses, we are in a downward slope, and there's been a lot of selling. So I cannot recommend Zoom at this point, unfortunately. It just isn't the right time for it right now. Okay, thoughts on Fastly. Okay, well, Fastly was one of my trade alerts. It went up like a bottle rocket, and boy, it came back down to earth fast. But let's look at Fastly, FSLY. Let's see what's happening. I still think it's a good company, but it's not viable at the point. It's starting to get some strength. Yeah, okay, very interesting. So this might be a buy eventually. This is definitely watch listable. As you can see, it pulled way back on the weekly chart, and now it's had 2 nice weeks of upward momentum, and it looks like it's going to retake the 40-day line at 84. So could you buy this at this time? It's a little bit premature to buy this, but I'm going to put this on the watch list. I do like the stock. I do like Fastly, and I do think it's going to come back. They did miss, and that's what caused this tremendous pullback. They did miss on last earnings, but they still have extremely excellent sales growth, 42% year over year, and 37% are funds in this. They do have a negative cash flow, but that looks like that's being taken care of, and it's in the cloud area. So they're an edge cloud play, and I do like that area very, very much. And I was in this stock. I pulled out of it basically when it hit my 7% loss rule, and I was out. I have not been back in since, but it has a 6 out of 9, and it does have excellent funds ownership, and they are increasing. So, will this thing move higher? Maybe, because the relative strength is 98, and it's an upward trend. So this is definitely a watch list for Fastly, and I'm going to have that out on the watch list. I appreciate for this comment. It's a good comment. Good potential on that. So, all right. So, I cannot get on your watch list. Oh, I apologize for that. Let me just kind of show you sort of how to see the watch list at all times in case there's a problem with the link or anything like that. I'm going to show you right now on the screen how to do that. So let me go ahead and pull that up so that you can see kind of how to take a look at that watch list. Well, what you do is you go over to you go over to www Dallas Trading Floor, and I just kind of want to show you how to look at that. This is the YouTube videos. You go over here to this thing called Watch List. You click on that Watch List, and then there's this little button. It says Push to see the watch list, and then you push that, and voila, there you are. You have the entire watch list. So thank you, Sagapon. I appreciate that very much. Super easy now to get to the watch list at any time. All you have to do is go to www.Dallas Trading Floor and then go down to the watch list tab and then punch on that button and you'll see the watch list. And I maintain this each day. So this I'm going to improve this out. So I really appreciate that question. This will make it a lot easier with the accesses. And yeah, I had stuff in there that wasn't working. Again, I am a stock guy, not the greatest technical guy. Even though I am a SQL programmer. I just want you to know that. I'm very proud of that. Okay, so thoughts on FSR? I have a $25 option, a $25 call on 2021. So let's go back to see if we can, if I can give you a good, at least something to chew on there with FSR. So let's look at FSR real quick. FSR. And there we go. That's Frisker. I do like Frisker, by the way. This is the electric car company that I do think will be successful. Why? Because not for technical reasons, but for fundamental reasons. They have a partnership with Magma, which is a really great company. It's sort of like it's sort of like a TSMC. It's a company that can manufacture just about anything. So I really, really like that about Frisker. Now let's look at the technicals, because of course, when you buy something, you buy it on technical merits, but you also buy it on fundamental merits. And I do think these have good fundamental merits. The question is, can we do anything with the technical merits? This has been Hans Frisker has been around for a while, so he does have some real money. He has market cap of $1.2 billion. You need that kind of money in this business. It's extremely expensive business. Let's look at the chart. This is the daily chart on it. This is a kind of an all over the place chart. It does have a relative strength of 89. It has pulled up very nicely. It's a 1744, up $2.43 today, but that does not necessarily make a trend. We do have increasing fund ownership. I do like this. Here's the problem that I see with Frisker at this time, and that is it does not have the funds. That is the key. It still doesn't have enough funds in here. And the checklist is a 5 out of 9, it's not a 6 out of 9. 6 out of 9 and start considering it. So, what to do? I think that Frisker is a watch list at best right now. It is not a buy. I don't think you want to be in this one right now. Now, will it, could it move higher in the future? Absolutely. But I'm not really interested in the stock until it's over the $20 range and showing strength. And that's not the case now. But there has been some buying that it may move a lot higher. There was a lot of buying on it today, and it definitely is moving higher. This is a watch list, not a buy. But it's watch listable. That's absolutely watch listable. FSR is the symbol for Frisker. Thank you very much. That's a very, very, very insightful, very insightful question. I appreciate that. Okay, so let's see what we have. If I can, okay, Beam. Okay, let's see. Jim, I know you're not a big fan of oil and gas, but can you please shed some light on CPE? Before COVID, it was $45. Can you check if the fund bought it around? Yeah, absolutely, I sure can. It's not that I'm not a fan of oil and gas. My brother and I actually own mineral rights in in the Permian Basin, so I love it. As a matter of fact, trading in oil and gas helps me get a stake to trade actually other stocks. But right now, I think it's a little bit challenged. Just to say, it's a little challenged now. It's nothing against oil and gas. It's just it's right now we're in a cycle that we're in a downward cycle. I just can't recommend this one. It's got a relative strength of 1. Unfortunately, this is the worst relative strength that you can have right now. And since I'm a trend trader, I can't really recommend this. But let's see if there's any funds in it. Let's kind of scope it a little bit. It's got a 44 checklist, 4 out of 9. This just isn't good enough, unfortunately, for me. We have funds are selling this. This is a stock, folks, that funds are selling right now, unfortunately. And that is definitely the case. It is moving from 200 to 195, and there was 350 last month. So the funds are basically giving up on this and they're going home. Please, funds are going to move this stock. The funds are selling out of this. There's half as many funds in this as there were, as there were a few months ago. Let me kind of give you an idea of that. In December of 2018, there were 465 funds that were in this stock. By December of 2019, a year later, there were 458. So that was okay. But September of this year, there were only 195 in it. So I suspect by December of this year, there will be probably only about 115 to 120 funds in this. The funds are selling this one. I don't think you want to be in a sinking boat. This is a sinking boat. Now, things can change. The market can change. The oil business can change. But right now, I don't think you want to be in this stock. Thank you so very much. I've run about an hour, and I appreciate everybody. Happy Friday 13th. I never thought I would say that, but happy Friday the 13th. If you want to get our action trade alert, super easy to do. All you have to do is go to www.dallastradingfloor.com, and it's super easy. First and last name and subscribe, and you'll be on the list. Of course, you can get off of it anytime you want. We don't sell the list or anything like that. And I hope to see you all on Monday. Happy trading, and be careful out there. And it looks like we may see the market move higher in this next week. I think that we're still in the bottoming process. Be careful with your trades, but happy trading.